What up traders, what up investors, Ken here from Dyslexic Investor, and we're going to be looking at strictly the S&P 500. We're going to look at the ETF SPY, which is the one that you see a lot of people talk about regarding the S&P 500 performance, and the ones that you'll normally see within Wallstreetbets or are investing or whatever form or whatever place you're talking to. Anyone who's trading options or stocks knows SPY or SPY for short, looking at the benchmark of the overall stock market. That being said, it has been on a tear. Looking here, we're going to be looking at one particular trade that kind of came across the desk, lack of a better words, within Thinkorswim here. That was quite eyebrows raising, as you can see probably from the title of the video already. An individual made a pretty large put bet for a correction, lack of better words, or a downward movement within SPY by the end of the month. We can go ahead and look at that one up here. Pull up this. Let it load. It's still loading. Sorry, it's a little slow. I don't know why it refreshed. Still loading. It's not up to date. There it is. Okay, so someone at 11 o'clock or 11 a.m. this morning placed a bet for the 2nd of July, sorry, not June, placing a total of 33,000 puts at the 255 strike price that are for 58 cents. So this is a pretty astronomical bet, honestly. We can look at that. So we can look here. We can create this particular order here. It's going to populate down here again. So it's a buy 33,000 puts. Again, what strike price is going to be? The 255, and it's going to be the weeklies for the 2nd of July, and it's at 58 cents. This currently hasn't been bouncing around a little bit there. It's again, this is going to be making a little bit more sense once we look at the chart. So if we hit confirm and send, of course we don't have the capital requirements for it. It's literally a $1.935 million bet, risking on the line in the sense of a potential trade down to basically the 250, 255 level in SPY, and we're currently trading at 311, 312 in today's market as of the 3rd of June. So that is a pretty sizable bet, I would say. This could just be honestly a hedge that someone's putting on for their overall portfolio. So if their portfolio is a $100 million account, they're just putting on a little bit of insurance, as they call it, on SPY. So a lot of the activities on SPY or SPY comes into the put side, because a lot of people use it for protection or insurance, whatever you want to call it. Alrighty then, so let's go ahead and that magical number of where this guy pulled it from, or this trader. So he's basically saying it doesn't have to come down to this price, but he's saying in and around this price. And we're going to be making this, want to edit. Why is it not letting me do this? Alright, it's good enough. Alright, so again, we are trading literally at 312, lack of better words. The reason why I have the 312.12 as a alert up here, so if you do a complete Fibonacci retracement from the swing high to the swing low, it literally lines up with the 8.6 retracement, which is around we're going to move that up just a hair. Why can I not move it? Oh, too far. Thinkorswim's a little struggling here today. Alright, we'll replace. There we go. We're going to call it basically at 313, where it lines up with the 78.6 percentile move from the swing high to swing low. And that usually could be the first sign of resistance on the way up. We're really extremely close to it. So this kind of happened again where we kind of hit the 200-day here, where we're coming up with a lot of momentum, a lot of steam, a lot of power, and we kind of bounce off that invisible wall, aka overhead resistance. kind of fail back, kind of come back again, boom, oh, failed it again, oh no, let's try again, and get that steam, get some more oomph behind it, put some elbow grease into it, and boop, you get to pop over the 200 exponential moving average and continue the momentum higher. I feel like this is going to be more of a stair step higher as well, but we could be hitting a couple small roadblocks coming into this due to the fact of all the unemployment stuff is going on and all the other various aspects of the market. We've kind of run quite a bit up here in the last 2 weeks, and a lot of people are projecting, again, these people don't have crystal balls to my knowledge, they are saying that we are due for a pullback. Always take that with a grain of salt, because they could be talking their own book. You could be discussing, just kind of playing to what they want to be talking about. So you've got these folks coming on CNBC talking about, oh, you got to do this, this, and this with your money. Like, you gotta be careful with that. On the weekly side of things, again, we're talking from, let's just call it from a swing high up here all the way down to that projection is basically a drop of nearly 18%, nearly 19%, and that would be considered correction territory, or a bigger steep decline. So basically within a month from now, or literally for these bars, that we could be dropping 20%. Just to kind of give you some retrospectro information, so from the high of the mid of February, and then within 4 bars we dropped about 35%-ish within 4 weeks. Again, this is a particular bet that we can drop a little bit more than half of that inside of that longer time period. Looking for potential, looking at probably a lot of resistance on the way down at 267. Again, there's a lot of money that has entered this market, so a lot of people could have weak hands. They might want to kind of get those weak hands out of the market before we can make another higher run. That is something that I do not agree with, but things that could happen, because again, I don't have this crystal ball as well, so this could be going either way. Am I buying SPY puts? I normally don't like to do that. I'm not running out and doing things that I see people trade here. Again, this could be, we don't know what this fund or this person's doing with these 33,000 contracts. We have no idea. Like, only person that knows is the trader who executed it, or the fund who did. So they could be doing whatever with it. We don't know. So it's hard to speculate on that. But that being said, looking at the signs that we looked at with the 313 being a potential overhead resistance, we haven't really had a pullback. We could potentially see a pullback if the momentum is still alive and strong. With what we're looking back here, the trend of the last 2 weeks, it has to continue between the 5 and 8 exponential moving average. So that's going to be, the first line is going to be at 307, then 305, and then the overall support is going to be coming in quite a bit, which I'll consider standard support at level 1, which is going to be around 296 to 295, because that's where the 21 and 200 are currently at this point in time. We also see that the parabolic SARs are still below, so that is no sign of a potential correction or a steep down decline in the current marketplace. That being said, anything can happen. Just remember that. We are currently looking at this at 215-ish on the 3rd of June. So just be very mindful of that. Be very careful out there, and especially with put options, they usually have a fairly high premium, and them being out of the money, that could decay fairly fast. Again, this trade is literally less than 30 days of life left. So there's the bet is literally a 4 or 5% probability of profit, or a 4% delta of it actually being in the money. So this market really has to come down fairly steep to be able to execute those trades there, and be able to make this particular trade a profitable one at that, which is quite interesting without a doubt. So we'll see what happens. Again, we can look at create the duplicate order, and again, that is a lot of it's a lot of money. As we're talking about, again, $1.935 million. And again, if the market completely crashes, goes to zero, that 1.9 million will turn into nearly $1 billion. Let's just call it $840 million. So again, that's if the market goes completely to zero, which I hope that doesn't happen. Like, right? All right, on that positive note, we also have another fantastic live stream going out tomorrow. If you didn't join the previous one, we had a really cool, fun live stream that we did about Zoom. You're able to bring your favorite beverage, coffee, tea, whatever you like. And then we have a snack. We just talk about some stocks from like 3:45 into the close, and then we look at some earning reports that are coming out. The ones we're going to be looking at key for tomorrow are going to be Work, which is Slack, which is Work. Oh, I spelled that wrong. Work here, which is still up a lot today. And then we have DocU, which is DocuSign, which has also been up, and these have been very strong stay-at-home pandemic plays. So would like to see on how they report and if they're able to beat the overall Wall Street expectations and continue climbing higher or not. And we'll be doing some analysis around that as well. Again, guys, thank you so much for watching. Don't forget to like and subscribe. This is Ken from the Dyslexic Investor, and I'll catch you guys on the flip side. Peace.